Hello, and welcome to Calming the Chaos podcast, where we talk with people around the world who can help you find peace in a chaotic world. I'm your host, Tracy Canella, licensed mental health counselor, certified eating disorder specialist, and advanced clinical hypnotherapist. Calming the Chaos podcast is for those who want self-help resources and education. It's not a substitute for counseling or psychotherapy. So if you like what you hear, please subscribe and share it with your friends. Thanks so much for listening. And now, let the chaos begin. Well, hello, and welcome back to Calming the Chaos. I'm Tracy Canella, and I have been gone through the summer, and now I'm back. And it's kind of interesting getting used to these controls again, but a bit chaotic is not so bad. Taking a lot of deep breaths to calm my chaos this morning, and that's for sure. Well, I'm sure you're going to be excited about our guest today. Many people say it's all about the money, and maybe it is, maybe it's not. I say it's all about the chaos, but we'll see. The person I am going to be interviewing today, Sarry Ibrihim, he has a master's in business administration, and he is a finance guy. So he kind of is all about the money when you think about it. And we are going to be talking about growing safe and predictable wealth. We're also going to be talking about some conditions that people are experiencing financially in the world today. It'll be just kind of a cool, casual conversation about a very important topic, which is money, right? For many, money means survival and livelihood. So Sarry Ibrihim is going to tell you about how he got started in this field, a little bit about himself, and what he does to help people calm their financial chaos. So without further ado, I'm going to bring up Sarry Ibrihim.
Hi,
Welcome,
Tracy.
Sarry.
Hi, Tracy. Thank you so much for having me on. It's a pleasure to be here and speak to you and your audience.
Absolutely. I am really super excited to have you as my kickoff guest. Not like I'm going to kick you off the show, but kicking off season 4 of my podcast. I cannot even believe that I'm going to be going into my 4th year of podcasting. It's just crazy. So, Sarry, if you can tell us a little bit about yourself, where you're from, and how you got into the financial field, I'm sure people will be interested in listening.
Yeah. Thank you for that. So I'm from Chicago, Illinois, born and raised here, lived here my whole life. And I'm a financial planner. As you mentioned, I have a company called Financial Asset Protection. So we do financial services, financial planning, almost like financial counseling, really, for people in all types of backgrounds. And pretty much over the phone or over Zoom in all 50 states. So we don't have any like geographic restrictions. And this has been the situation even before COVID. So when COVID happened, it kind of just made things easier to do things virtual. But yeah, that's who we are. That's who I am. I kind of got into this space when I was a senior in high school. I had to take a class called Consumer Economics, and the class was about very basic like business and economic stuff. It was like how to write a check, what is a mortgage, what is interest, and I like that. That was my favorite class probably in all of my academic life that I had to take because it was so relevant, right? It's so needed, and so applicable to our actual lives as adults. And I wanted to kind of like make a career out of that. Like I want to do this, like whatever this is called, I want to do this in the future. But I didn't really know what it was called. Financial counselor, financial consultant. So I got my MBA, and thinking my MBA was gonna give me like a better idea of what to do. And it kind of did a little bit, maybe like 10 or 20%. It gave me like a little bit of a route, but really it came down to working with people, talking to people, doing internships, doing different jobs until I actually found this exact thing that I wanted to do. And that is being almost like a money coach, like a financial coach for somebody, completely independent. So it's not like I have to like work for one company and I have to like provide one type of product or service. It's really open-ended and it can go anywhere. And it's all about the client and where they want to go and what they want to solve. And especially like in today's like chaotic, world, I think that's definitely needed for people.
Yes, financially chaotic, I am sure, right? And I would love to hear more about the people you serve you're a financial planner, financial analyst, financial counselor, financial coach, kind of
Yeah.
all things
Yes.
financial for you, right?
Yes.
Yeah, so the typical person, and we'll go to your website in a little bit, the typical person though that comes and visits you and really is serious about
Mhm.
financial getting their finances in order. What kind of people do you typically see come in for help from you?
Yeah, so the number one thing we see is people want a difference, right? They want to kind of like go beyond what they already think and what they already believe, and they want something different. They don't want to just check the boxes. They're not trying to take a standard approach to financial freedom. They're willing to think outside the box, do things kind of unconventionally, do things
Mm,
against what other people have been telling them their whole lives. That's the number one quality we see. Now,
mm,
as far as like how much money they have, how much money they make, how much money they can keep at the end of the month or end of the year, that is very diverse. So we
mm,
have all the way from somebody who's, still in college, works, part-time at a restaurant, just wants to save up like $200 a month, all the way to clients who are retiring. They're 65 years old, they have 10 real estate properties, they have their full-time work, they have a side business, they have stocks. So that's kind of the spectrum of who we
yeah.
work with. But I think, Tracy, the most important thing is the mindset. That is something that you can't really put a price tag on. That's something that is critical when it comes to
Mm.
financial freedom.
Oh, and I'm all about the mindset,
Mhm.
being a licensed mental health counselor and working with the mind. So, when you talk about mindset, say a little bit more about, do we have to shift our minds about money, or do we have to just be a little bit more creative, thinking outside the box?
Mhm.
What sort of mindset shifts do we have to have when we're in a certain financial position and we want to change that into a more lucrative or profitable one?
Yeah, I would say both. You have to be very creative. You have to kind of think you have to think in a way that something hasn't existed yet and you want it to exist. And then also in the sense of shifting your mindset. So
Mm,
like for example, what that means is, we're taught invest in the stock market, trust your local banker, stay out of debt, keep a job for 30, 40 years. This is kind of like the standard, I guess, from what I've noticed, at least the standard approach to financial life, a good financial life, no debt. And I think that you want to some of the things to shift is, as far as debt, there is definitely a difference between good debt and bad debt. Good debt is pretty much a way for you to leverage other financing using your assets, and then with that money that you leverage, you could ultimately make more money with that money that you've leveraged. That's an example of good debt. And then bad debt is the opposite. Bad debt is when you borrow the money and then the cost of using that money is greater than what you're able to use to make with that money. So very common examples of good debt and bad debt are like, using a mortgage to finance your business, or using a
mm,
line of credit, a home equity line of credit to finance a business or other investment. Typically, that's a good form of debt because there could be tax deductions with the interest. The interest is typically lower than other forms of debt. It's spread out over like 15 or 30 years. You're already paying a mortgage, you're already paying your bill. So adding in that cost of capital, is for most people is not going to make that dramatic of a difference. So that's a good form of debt. And then the money that you could make with that money is going to be greater than the cost of that money. If that makes sense. And then bad debt is like a credit card. If you have a credit card and it's like 16% interest, every month your monthly payments alone in interest could be like $200 or $300 a month. That is detrimental for most people. It's going to hold you back. The money that you
mm,
use a credit card with is actually going to be much greater than what you could make with that money. So that's a big mindset shift right there. A lot of people are like, whoa, that just kind of blew my mind. I didn't know that you could use debt in a good way. Most people don't even think that the word debt could be used in a good way, but it could, with the
mm,
proper guidance, the proper coaching, the legal advice, the tax advice. It could be used in a way to make you more advantageous. So I kind of just like going through this whole process, going through the whole finding financial freedom process. It changed me as well. It changed. Like I had a lot of moments where you're aiming at something and you're looking at it. It's like, that's for sure wrong. Like that's for sure wrong. And then you learn more facts about it, and you're like, oh, wait a minute, the opposite is true actually. So that's
mm.
kind of the mindset shift, and I think that's essential when building wealth.
Good debt and bad debt, kinda like the nutritionists say there's good
Yeah.
cholesterol and bad cholesterol, right? So you wanna eat more avocados and less butter or whatever.
Uh-huh.
So then you're looking here at people who are at all sorts of financial positions in
Hmm.
life right now, even from, so I don't know that people would be calling you when they are homeless or living out of their car, or they just had
Hmm.
something repossessed, but they could, I don't know,
Hmm.
they could be willing to do something creative. But I guess what I want to ask you is, if you are in that position, are there tools that you can suggest to help people who are just really impoverished in this in on the poverty end of the spectrum?
Yeah, definitely. I think that somebody in that situation, right? Like, very little limited resources. In other words, they're struggling financially. I think that the number one thing that that person needs is they need somebody to talk to. And yes, we could definitely talk to somebody in that situation at no charge, obviously. And it's a matter of getting them to the point of reaching, some of their financial goals, right? Whether that's getting a job or
Mhm.
transitioning into a different role or starting their business or getting their business to a profitable stage, which is that's something that we see a lot, right? When people transition from employment, full-time employment, into their own businesses, there's almost always a dip in between the money they were making and the money they're now making as entrepreneurs. I think it's safe to say when you start a business, just assume like the first 1 or 2 years, you probably won't earn anything at all, and that's a reason why people have to go kind of backwards when they're entrepreneurs. But yeah, Tracy, to answer your question, I think that we definitely could help somebody with very
Mhm.
limited resources, and what that person typically needs is that person needs guidance. They need somebody to talk to, kind of very similar in your situation. When somebody has some sort of issue, the most important thing is they need a professional to talk to and a professional to help them decide on what's going to be
Mhm.
the best next steps for them.
Yeah, you would have thought that would have occurred to me, that people just sometimes need somebody to talk to, since I'm
Yeah.
in that business myself. But yeah, so just somebody, and it's free. You do offer a
Yes.
free consultation, so they'll be able to talk to you at no cost.
Hmm.
And so the spectrum that you mentioned earlier could go from somebody who does not have a job, who may be living out of their car,
Hmm.
homeless, and you could actually provide them with some financial goals, is what you said, and
Yeah.
that's very important. I want to show you the spectrum that I made based on what I feel is going on in the world today, and we can
Hmm.
talk a little bit more about these different situations.
Hmm.
When you consider what we just talked about, which is at the left hand side of the continuum: homeless,
Hmm.
unemployed, somebody living in poverty, you can make a phone call. Of course, at all of these points, you can make this free phone call
Yeah.
to Sarry or his team at the Financial Asset Protection. Is that what it is?
Yeah, that's the name of the company, Financial Asset Protection, and then the website
Mhm.
is finassetprotection.com.
Yes, and we do have that website as
Hmm.
well, and we'll put it up here, and let's see where it shows up on the screen.
Oh
There
yeah,
you
perfect.
go.
Yeah. Hmm.
Yeah, right. And then so you can go on there, and there is a number that you can call. So if you were to work with somebody who is, say, what we were just talking about, just really, maybe they have a lot of, they don't really have a lot of assets. They
Hmm.
might be homeless, unemployed. Then maybe one of their goals is to actually get some gainful employment, get a job, or
Hmm.
get a stable living situation. Are you able to refer them to this is what I usually do, is community resources referrals, how to get things for free from some agencies that help people who are struggling. Do you do any of that sort of work, or is it mainly just kind of working toward someday getting assets, like you said, borrowing
Hmm.
off of a home? Well, they don't have a home,
Yeah.
but maybe there's another way they can go about it. What kind of ideas do you have?
Yeah, absolutely. Yeah, one of the other things I want to be known for or want to do is I want to be a professional networker. So I want to be able to connect somebody in the right, if I can't do it in-house here, to be able to connect them to somebody who has done that or can do that. So yeah, absolutely. If somebody's in a situation where they're looking for um, an employment agency, or they're looking for some sort of other not-for-profit organization, I will definitely be able to help them, either through somebody I've worked with in the past or somebody, and then we can even work together. I've noticed that sometimes that's all people need is they just need somebody to work with them. Like even if it means jumping on Zoom together and sharing screens and then Googling things and then, creating this like framework. All right, let's reach out to these 5 people. Let's have a meeting next week and let's see what happened differently there, and working with them all the way until they hit their goal.
Yeah, I know that sometimes when I suggest some resources, that automatically puts a client at ease, but also overwhelmed, right? Because
Hmm.
then there's all these phone calls that you need to make
Yeah,
and or the time that you spend on hold.
yeah.
How do you go about encouraging people to work through that chaos of all of these? Okay, so if I want to actually work toward more
Mhm.
financial stability, I'm going to have to do this, but it's really causing me a lot of stress. Do you have any kind of mindset shift tricks that you might be able to suggest to somebody who's overwhelmed just by making some phone calls?
Absolutely, and this was me too. I used to get really overwhelmed, even if I just had to make one phone call and like read one email. I used to get really overwhelmed, um, and I had to change that, right? And it's just like anything else. When you practice it, you get better at it. So one thing I started to do like 10 years ago, and I'm still doing till today, is I break down all the tasks I have to do into smaller, more manageable pieces. This is something I actually learned in project management. In project management, you have this whole, like, for example, like a software or a house or something you want to construct or design, and then it's going to be too much just to think about the whole development of it. So you break it down into smaller, more manageable pieces. We have the blueprint, we have the accounting, we have the budgeting, we have all the other smaller pieces, and the same is true in our daily lives, right? So if you had to call, 5 different organizations, I would take out a piece of paper, write down the date, and then write down the smallest tasks on there. And each one is very, I guess, specific. So it starts with a verb usually, like call such and such,
Mhm,
email such and such, write such and such. And then you're starting with that verb, and then your brain now is like, all right, I got this. I could do this now. If it's just one thing at a time, and then I usually like to do the smaller, shorter tasks up front. So that way it creates momentum to get to the
mhm,
more difficult ones. And I do this every day. And as an entrepreneur, I have, employees, I have partners, I have clients. I have to constantly think about like 500, literally like 500 different things. But obviously those thoughts are not sitting in my brain actively or consciously. I have methods in place where instead of me remembering 500 things, I have ways of having those 500 things in 5 different places, and then methods of reaching those 5 places every day, and going through like a system where that
mm.
way I don't have to remember anything, but I don't forget anything, if that makes sense.
Yes, the more manageable, easy,
Yeah.
shortest, quickest task first and
Yes.
gaining momentum.
Yes.
Yes, yeah, awesome. So that's great, great, great tip there. And so I just, for some reason, while you were talking, started thinking about our spectrum again and
Yeah.
thinking about this credit card debt. You mentioned it
Yeah.
earlier. I put that in the yellow zone because it seems that a lot of people are
Yeah.
in that space. But then here you are saying, no, no, that is bad debt. So we might have a lot of people out there with bad debt, or, and we're not here to shame anybody,
Yeah.
but we just would like to be able to, I would like to know anyway,
Hmm.
how would you work with somebody who comes in with maybe, I don't know, maybe a couple, 3 cards maxed out,
Yeah.
and they're really struggling with credit card debt?
Yeah, so step number one is you need to know your numbers. So what I do is I have something called like a personal financial tracker. And I outline, like, for example, um, on one side of it, it's like your checking account, savings account, your assets, like checking, savings, like other cash accounts you have. And then on the right side of it is the debt you have. So in this example, let's just say there's credit card ending in 1234, 5, 6, 7, 8, and then such and such. So each one has its last 4 numbers of credit card, and there's 3 of them in this example. So I would write down the total debt as of that day. So if one of them is, let's just say all 3 of them are $10,000 in debt, each one maxed out, the
Mm,
total debt as of this day, assuming that's the only debt the client has, is $30,000, right, in total debt. So on the red, it's 30,000, and then let's just say on the other side of it, the checking side, the positive side, it's, let's just say it's also 30,000, or let's just say it's 5,000 to make this more realistic. It's 5,000. So in other words, the debt is greater than the assets, and a lot of people are in this situation,
yeah.
especially as we're approaching the end of 2022. A lot of people, there's a lot of layoffs. Interest rates have gone up. everything is more expensive now. Inflation is like 8-9% on average across all industries. But that doesn't mean that everything has only gone up by 8%. And some things have gone up much more than that. It's just the average of all the goods and services. So a lot more things have gotten expensive now, resulting in more debt, or could result in more debt. So what do we do? How do we get out of the situation? Well, step number one, we need to outline the numbers. We need to know exactly what's going on. And then step number two is we need a plan, right? So what's the plan? Are we going to pay the minimums towards these? Are we going to pay more than the minimum? And then within step two, it's also not just paying down the credit card debt, but also how do we keep assets too? So just taking money from the checking side, from the asset side, and then paying down the debt, that's not necessarily always an effective strategy, because you're not saving anything. There's no surplus. There's no cash saving. So we need to figure out a way to save money and pay down debt at the same time. And it's a little bit tricky to do that conventionally. Doing that, just having our conventional mindset is difficult. It's difficult to do that. So we need to do this from an unconventional standpoint, a different way, a different approach to financial planning. And how do we do that? One way could be using the bank on yourself concept. So this was something that was outlined in Pamela Yellen's book, The Bank on Yourself Revolution. So it's a book that talks about the strategy called the bank on yourself strategy, and using debt and using your savings to grow your savings, as well as paying down debt at the same time with the same dollars.
Wow. Yeah. And so you've got a podcast called Thinking Like a Bank. And I
Yes.
can tell that right now, as you are talking to me, you are thinking like a bank. You're really living what you are talking about, right?
Yeah.
So in this situation where you've got $30,000 worth of debt, you've got possibly $5,000 of assets to draw from, what you would maybe suggest is to start to think like a bank, a little bit more like a bank, right? Don't go and get rid of your surplus. You're gonna want to actually start to save or bring in more money, because here's the way I think like Tracy, which is somewhat chaotic, but here it is. Like you can get money from income, you can get money from investments, but then there is the outflow of money as well. You can earn money, you can inherit money, and that can become coming in. But what you're saying here is to be able to employ some of the concepts by Pamela Yellen. Is that right? In her book?
Yeah. Pamela Yellen. Yes, correct.
So she is she the one who developed the concept? What was the concept that she developed that you said?
The bank on yourself concept. Yeah, she trademarked
yourself.
it and developed the concept, the bank on yourself concept.
And that is going to be able to get that good debt going again that you were talking about earlier, which is like, maybe, for example, if that person who has the credit card debt does have a home, if they own a home, which is a little bit higher up on the spectrum. So this is actually, in the green zone, where you got a mortgage, you've got an income, but maybe you've got that credit card debt there too, that you could actually take a home equity line of credit out and borrow against. So the equity in your home could be used, and you can have that money to be able to either start a business or do something else with that money. Am I getting that right?
Absolutely. Yeah, precisely. Yeah, definitely. So you could do either, if you have a house, you could either do a HELOC, which stands for home equity line of credit. And that's where you leverage the collateral in your house, the equity in your house, and then you use that to get a line of credit. And then you could use that line of credit to pay down other debt. The advantage of doing that is typically the HELOC is going to have lower interest rates. It's going to have interest rates similar to a mortgage. As of today, probably like 5%, 6%, versus your credit cards, which are probably going to be above 10% interest. So in other words, you save money when you do that. You save money. The other thing you could do is you could do a cash out refinance. Cash out refinance is a little bit tricky though, because it changes the mortgage now. It's like a new mortgage. In other words, it's like you could take your current equity, cash out, take out the cash out of that, do a new mortgage like 30 years out. You can get tax deductions for that. Talk to your tax advisor about that, but you can get tax breaks for the interest you pay on the cash out refinance on the new mortgage you have. Plus you take out more cash typically, and then you can use that cash to pay down other debt like credit cards, card notes, things like that, like the bad debt, right? And then again, the advantages of doing that is you save more money, you have more cash flow. Like for example, I'm working with a client now. She has like a few cars, credit cards, some tax bills very similar to a lot of Americans, very similar situation, about $100,000 in debt, right, and liabilities. And she also owns a building, a commercial building. So what we're going to do is we're going to do a cash out of that building. We're going to take out a 30-year loan, a commercial real estate loan against that building of about $120,000. And then she can now pay off all that bad debt using the commercial building she owns. And then she's gonna save about $900 a month in payments. So the difference of 1,500 and about, I think it's, I have to check the numbers again, but she's going to save about $900 a month. So now she's going to take this $900 and then put it into a cash value whole life insurance policy that's going to be used
Mm.
to build up cash in her policy. And then she can now build up cash and she's paid off all her debt, and now she just has one form of debt, which is the commercial real estate building. So this is again shifting your mindset, shifting a way of looking at, like, what do you already have right now going on, and what could we change or improve. Now, to your point, Trace, I know what you're probably going to ask next is, what if somebody doesn't have a commercial real estate building already? And that's fine. A lot of people also don't have commercial real estate just sitting around with a lot of equity in it. But the
Mhm.
point here is not use commercial real estate to pay off debt. The point is, go through your assets, work with an advisor, kind of identify where you're at, and think of leverage, think of good debt to kind of enhance certain things. Also, I would check out the book, The Bank on Yourself Revolution book by Pamela Yellen.
Mhm.
If you actually reach out to us for a free call, I'll buy the book, the Bank on Yourself Revolution book, and send it to you via Kindle for
Wow.
free if you reach
Wow.
out for a consultation. But yeah, I recommend the book, and it talks more about using kind of this life policy that's mentioned inside the book to pay
Yeah.
down debt, to start a business, to build wealth, to pretty much do anything you want with your money.
Yeah, so here's the website again. So go to that website. There's a phone number you can call for a free consultation. And then I was going to ask, what if
Mhm.
somebody doesn't even own a house? They're renting,
Yeah.
they've got credit card debt, and maybe they've got a pretty good paying job, but they're just not able to keep up on stuff.
Mhm.
What about these cards that advertise zero interest, zero payments for 2 years or something like that? Do you ever advise people to go for those, or are those just kind of schemes? I've always wondered.
Yeah, so those could be legit, right? It's just, a lot of banks have promotions, right? Like zero. I haven't, yeah. So you could do 0% interest, and then obviously no payments because there's no. Actually, there's still maybe might be payments due on credit cards or other types of debt, but no interest, and those are good. Those are good for balance transfers. The downside to that is, though, is what if you can't qualify for that new credit card? Because let's just say you have three credit cards and they're all
Mm.
maxed out, and then you apply for a fourth one with 0% interest for 12 months or for 2 years. Then that bank is going to look at the other debt and say, well, you just have all this other debt. How do we know, like, you're able to handle, like, they could obviously do the math and figure out, like, if you can handle that other debt or not. So that could be a situation. What if somebody's relying on just transferring their debt they have into a 0% interest credit card? What if they can't get that? And usually
Mhm.
there's this ironic relationship between banks and humans. And it's weird because when people want money, banks can't give it to them, and then vice versa. When banks want to give money to people, people don't want to take that extra money from the banks. It's this crazy inverse relationship between people and banks. And the point is that usually when you need money from a bank, they're typically not available to give it to you. The banks are available for, like, people who don't need more financing. They love to give those people money because they know that they can handle that kind of debt. They want to give them that money, but the
Mhm.
opposite is definitely true as well.
Yeah, wow. And that's so true because I keep getting these faxes. Yes, I still have a fax machine. It's a bit archaic, but I still have a fax machine, and they say need money to grow your business and
Yeah,
all this other stuff, and I'm just like, no,
yeah.
no, leave me alone. So yeah, so then you would be maybe advising that person with the 0% to be
Mhm,
able to put some money away to start paying down that $30,000, making a plan in
mhm.
the next whatever how many years it
Yeah,
is, and then so your payments aren't going toward the interest that your card every month is
mhm,
gaining, but it's going toward, all right, here's what we have. Here's all the debt. It's consolidated. It's on one card.
mhm.
We have a couple of years to work on getting that balance down, correct?
Exactly. Yeah, and one thing that, like, I would emphasize on is, don't just look at, like, the name of the product or, like, the advertising of it. Like, work with an advisor, work with a coach, somebody who can like take you into it like further. Like, all right,
Mhm.
let's open up the terms and conditions to this. Let's do the math now. Let's take out an Excel sheet. Let's plug in. If you paid X amount of dollars from now over the next 2 years, how much would you spend? Let's also
Mhm.
compare to the 0% interest if you can qualify for it. Let's also compare to this thing, and then kind of like let the math take us to the right answer. This is something I
Nice.
think it's like it's essential, right? Everybody needs some sort of like professional or advisor on their team, right? Whether it's mental health, whether it's an eating disorder,
Mhm.
whether it's getting out of debt, you need somebody to help you work through it. And you could definitely see a big difference, right? Because technically speaking, you could try to handle whatever issue you're having on your own versus having somebody help you, and then the results could be completely different, right?
Mhm. Yeah, so it sounds like it's really customized what
Yeah,
you do, for
yeah,
every individual, like counseling should be. It shouldn't be a
yes,
cookie cutter approach, but, it's taking the individual and their needs into consideration.
precisely.
So so do you have any products or services that you would like to be able to promote and or talk about, Sari?
Yeah, so you can go to thinkinglikeabank.com. It's just thinkinglikeabank.com. You could download our free ebook. You could also check out our podcast. You could connect with me on LinkedIn. Everything is pretty much at thinkinglikeabank.com or the other website, finassetprotection.com. So one of them is pretty much our company website, and the other one is our content website with the podcast, the ebook. So yeah, check
Mhm.
out those, and then if you want a if you want to get a copy of the free book, the Bank Item Self Revolution. If you want a copy of that for free, reach out to me for a 15-minute consultation, and I'll send you that book for free via Kindle.
Wow, that is such a great deal. I'd like to be able to see if I can manage sharing the screen. It's been a while since I've done this, and, so hold on just a
Sure.
second and see if we can go on to your okay, can you see that?
Yes, yeah, I could see it.
Yeah, okay. And this is your website here, and, again, that's growing your money safely, predictably, and guaranteed. And so this is just how the website looks. And then I believe that there's at the bottom some steps that you can take right
Yeah.
here.
Hmm.
Finance, assets, protection, structure. You can go ahead and do the step one, get your free financial assessment, which is what Sarah was just talking about. And then through that process, you can ask him for that book that he said. And he also has a free ebook as well. And then there's some links to the podcast. Really, you can get to the podcast on this site as well. All right.
Exactly. Yes. Hmm.
Yeah. Anything that you want to say about your website here? It looks like you have some pretty good guests and people who are going to be. I like this last one. Avoid taxes using these vehicles. Boy, I'm going to
Yeah,
have
of
to listen to
course.
that one.
Yeah, yeah, definitely. That's kind of the objective, right? Of thinking like a bank. The podcast is we want to. I brought on a bunch of guests. I think that's 69 episodes. We brought on guests who talk about taxes, who talk about savings, who talk about investing in real estate, and all of this can be done. And I wanted to kind of make the content applicable to anybody in any financial situation. So again, if you're listening to this, you're like, you know what, this doesn't apply to me. It most likely, I could almost bet it does apply to you. So check out these episodes. And I really wanted to make the podcast episodes like, whoa, I didn't know you could do that. Like saving taxes, grow wealth regardless of market conditions. Invest in real estate at any phase, at any financial phase in your life. No, you don't have to be a multimillionaire to invest in real estate. So that's kind of like the approach I wanted to take for the podcast and for our content.
That is so cool. So, any kind of financial situation that you can possibly imagine is probably going to be on there.
Mhm.
And I love that idea that you can just go fish around in his
Yeah.
podcast. So they do. I do have that you're on Apple, you're on
Mhm.
Spotify. I can go ahead and just show some of the episodes here on Apple. And this is that avoid using taxes
Yes.
using these avoid taxes using these vehicles. And so passive income, I've always wondered about that. I've tried a couple of times to do some passive income. I'm always thinking I make more money active income. So I
Yeah.
would love to listen to that one.
Yeah.
Which one would you recommend for our credit card person? Do you have one that you remember?
Let's see. Credit card person.
Ooh, Bitcoin.
I might have to do an episode just on debt
Yeah,
management.
you could.
Uh,
Yeah.
yeah, yeah, it's a good idea. Yeah, to do it that way.
Here's episode 54, why having great credit leads to more business. And that might be
Yeah.
one that you would want to listen to as a preventative measure
Yeah.
to not get into credit card debt. But it does have all things financial. And I love the variety of episodes that you have.
Yeah. Thank
So
you.
let's just go ahead and take a trip over to your Thinking Like a Bank website while I'm still hot on this sharing the screen thing, because it's been a while. Let's see here. Yeah, let's do this. So this is Thinking Like a Bank.
Yes.
And this website now, see, it has the tab up there on the upper right that says get a free copy of the ebook, which I was able to do really easily. And I'm reading through it right now. So, and then there's the podcast is on Apple, Spotify, and then you've got a YouTube channel as well.
Yeah.
Anything you want to say about the book to promote it or to talk about it at all?
Yeah, it's just a free book. It's pretty much 30 pages long, and it talks about some of the. It talks about what we're talking about on this podcast now, but in more detail. It talks about examples, real life examples. It talks about the benefits of it and how applying that strategy mentioned in the ebook works. And then if you want, you could the ebook has links to scheduling the free call. So if you want to download the ebook first and then call, you could do that. Or if you want to call then download, it's up to you. Whatever you're more comfortable with doing. And I also took the ebook. I took some questions too that I would get from people. Like people would ask, how does this work or how does that work? And I took all those questions, kind of compiled them together, and then put them into this ebook to kind of provide more content and more awareness on the concept that we dive into.
I love this little scrolling testimonial board you have here on the left in the black box. That is really super cool. Yeah, and there you are. And so this is about Sarry. And so this website is really super cool. And again, free copy. And then if you ask Sarry about the Patricia Yellen book, then you are going to be able to get a free copy of that as well, right?
Yeah, Pamela Yellen. Yeah, Pamela Yellen's book, Bank on Yourself. You can go to Kindle and buy it. It's probably like $10 or $12 on Kindle, or you can reach out to me for a free consultation, and then I'll send it to you for free.
Yeah. Well, great. And then I also noticed that you have a YouTube channel that I'm going to go ahead and show just a little bit. You've got quite a lot of content on YouTube, Sarry. I'm impressed. Look at this.
Oh, thank you.
Yeah. Yeah. So we've got all of the episodes. Some of them are video podcasts, I imagine, and some of them are just audio. Yeah.
Some of them are video, some of them are audio. My next goal that I want to do is I want to, because these are all podcast formats or even clips from podcasts. So my next goal that I want to do is I want to actually like have it like a whiteboard where I'm drawing out like, this is how, an example of like actually like illustrate with numbers and calculations and showing more of that. It's just going to take, I'm so overwhelmed. I have to kind of like prioritize. And there are some videos where I am illustrating things, but I want to do more of that on YouTube, like more illustrating examples and kind of proving some sort of concepts or cases.
We're all about overwhelm here at Calming the Chaos podcast. So maybe you should check us out a little bit more. And yeah, exactly. YouTube can be very, very overwhelming. And I appreciate that you're on there and you have so much content. So so check Sarry out on YouTube. Check out the website, either the Financial Asset Protection or Thinking Like a Bank, and his podcast, which is Thinking Like a Bank, making it really simple, just having that one name. And so anything in closing that you might want to say or suggest to our listeners today? It was just so nice talking to you, and you offered such a lot of helpful information to everybody out there.
Oh yeah, it was a pleasure being here, Tracy. I enjoyed our conversation and nice talking to you. And hopefully the audience can get a lot of value out of this. And yeah, I'd like to talk to you and see how I can help you out with your next financial move.
Great. Sarry, wonderful having you as a guest. You take care, and you have some of that Chicago style pizza for me. All right. I hear it's really good in the Windy City.
Yeah.
All right.
Thanks.
Thank you for listening to Calming the Chaos podcast. If the information in this podcast has been helpful, please consider subscribing and share it with your friends. You can find this podcast on iTunes, Apple Podcasts, Google Music, Spotify, and on YouTube. You can also go to our podcast website at www.calmingthechaospodcast.com, where you can listen to all Calming the Chaos podcasts. Thanks so much for listening, and I look forward to sharing my next podcast episode with you. In the meantime, take care.